Let's take a look at the stock of the day, which is Cogstate. It's a neuroscience technology company looking at optimising brain health assessments to develop new medicines and enable earlier insights into healthcare. Now, the business has released its September update, and sales contracts fell 56% to $17.9 million US for the first quarter of 2023. Meanwhile, total revenue fell 27% to $8.9 million US for the first quarter. Let's hear what our experts think. Claude, we'll start with you. What do you think of Cogstate?
Well, I should say Cogstate's one that I own shares in, and the headline numbers of today's quarterly definitely would probably be disheartening to the casual observer. But what you've got to remember about Cogstate is that they have a smaller amount of their money that they make from ongoing, steady, quarter by quarter contracts for using their brain ability assessment software, which helps tell if people are, for example, suffering from Alzheimer's disease. They have some stable revenue there, but the vast majority of their revenue comes from clinical trial revenue, which is mostly companies, I think, that are trying to develop treatments for Alzheimer's. So as a result, the natural way of their business is to have fairly lumpy quarter on quarter, both revenue and correspondingly cash flows. And what we saw this quarter undoubtedly was a weaker quarter. Last quarter they had plenty of free cash flow and their operating cash flow was stronger. This quarter it was very narrow. They're still free cash flow positive each quarter, even in this very weak quarter, but their revenue down, cash flow down, basically just because they have been suffering from the fact that they have slower than expected patient enrollment in one of the studies of one of their larger customers. And on top of that, just random delays in some smaller customers. And then they, of course, had to utter the dreaded words where they expect revenue delays, which are timing issue only, to continue into the second quarter of 2023, but largely recover in the second half of 2023. So basically that puts them in the classic category of saying, oh, we're going to have a stronger second half, which may or may not turn out to be true. But look, I think that the bigger picture here, and which is why I own shares, is even in this weak quarter, the amount of clinical trials contracted future revenue increased. And, they've got US 36 million roughly of contracted revenue that's going to happen as a minimum in FY 2023, and then almost the same in FY 2024. So the opportunities for them to grow are there. It can be a lumpy business quarter on quarter, and also it can be affected by, basically how much money is going into Alzheimer's, developing drugs for Alzheimer's in particular. And that's why Cogstate is interesting, because it's a slightly different story from the quarterly we saw today, but they've recently had a big share run up on the back of some relatively positive clinical results, which probably means there's going to be ever more research and money spent into treating Alzheimer's.
So is it going to be a buy, sell, or a hold from you?
For me, it's a hold zone right now. It's a little bit above where I've been recently buying shares, so I won't be buying any more shares at this current price. If I didn't own any, I would be open to buying a little bit at current prices. It's obviously a high risk, high reward company, but look, with this news around lecanemab having some success, they have a ongoing healthcare contract with Eisai, one of the companies that owns that drugs, and if that does take off, it would be upside for Cogstate there. But again, that's not certain. So in the hold zones, given I already own it, but not a terrible price to perhaps pick up a little bit, in my opinion.
Okay, great. Josh, what do you think?
Yeah, it's not one that we'd cover quite closely, but just looking in today's numbers, as Claude said, does seem to be a bit of a drop-off in these quarterly figures, declining on the year previous. They did say, management did flag this previously, saying that there would be that delay in revenues due to those clinical trials. So yeah, it should be one that you'd be okay to hold through this short-term dip in the company's fundamentals more than anything. It did rally quite significantly about 3 weeks ago on as a company in Japan basically reported strong results in their experimental study, which is quite significant. It's a little bit more than a rumour, because this company actually has a set agreement with Cogstate, and it's actually a substantial shareholder in Cogstate as well. So seems to be a little bit of a stock where it's sort of buy the rumour, sell the fundamentals at the moment. But I think long term it seems like a good business in the right area. Its main customers are these large pharmaceuticals companies, which are going to pour capital, which is how they get their revenues, more importantly. So yeah, happy to hold with this one for the time being.